Hello guys, welcome to part 10 of True SMC from A to Z 2026 edition, and in today's video we'll be diving deeper into lower time frame execution. If you have been following up with the series by now, I want to believe that you know how to do the direct entries based on the same time frame, of course, using the strong reversal patterns. In today's video, on the other hand, we'll be using lower time frame execution, and that's when now you'll get to access those instant risk to rewards. I mean, 1:5, 1:7, 1:10. Yeah, 1:10. Interesting, right? Yeah, so bear with me till the end of this video. And so without further ado, then let's dive in. Alright, so exactly right here on this chart, this is GBP USD, actually the present price action. And yeah, exactly right here, price has mitigated this order block and it's giving that reaction. Of course, for the direct entry, this will be your entry. Of course, you'll be targeting the external liquidity. That's how we did it with the direct entry, and of course we used the same time frame. We didn't shift to any other time frame. Now in today's video, using top-down analysis, here is when now we get to introduce another time frame, that is a lower time frame. And of course, depending with your trading style, if you are a scalper or a day trader or a swing trader, these time frames will differ. Of course, for the scalper, the higher time frame will be the M5 and the lower time frame will be the M1 or the 1 minute time frame. For the day trader, depending with how long you want your trades to last, I mean how many hours you want your trades to last, of course you can use the M15 as the higher time frame and the M3 as the lower time frame. That is if you don't want your trades to last long. But if you're okay with holding your trades for a couple of hours, then use the 1 hour as your higher time frame, and of course the M5 as your lower time frame. And for the swing traders, of course you'll be using the H4 as your higher time frame and the lower time frame as your M15 or the 15-minute time frame. Alright, so now let me get rid of all this so that now we can mark this GBP USD chart like a true SMC trader. Okay, so let me get rid of this, and here we have the naked chart, and we can clearly see exactly right here that price has taken out this inducement. I mean that one there. So that makes us the inducement. Price has taken that, and you can clearly see reversed back and made a break past this swing point low. And what does that mean? Of course, a break of structure, a bearish break of structure. So this means that we are in a new trading range, and of course it will be ranging from this high all the way to that low. And exactly right here on our impulsive leg, we can clearly see that price has already taken out the recently formed valid pullback high, or in that case the inducement. In this case it's a major inducement. Why major inducement? Because it occurred after the break of structure. Okay, so it's a good practice to mark these swing points. So let me just do it. So we have this swing point low that price broke, of course, while making that bearish break of structure. That is, of course, our trading range high, and of course our lower low or our trading range low is of course that one there. So in this case now we get to know like our boundary, our trading range boundary. Okay, so right now let's mark the POIs, of course, after we can clearly see that price has already taken out the major inducement. Okay, so right here we can clearly see that this one here is the SMT. We usually don't mark this because we know that it's a smart money trap. Price will give a reaction from there to lure the early sellers, but eventually you can clearly see exactly right there, price gave that good reaction to the downside, and eventually you can clearly see price reversed back and took them out. And at the same time, you can clearly see it didn't make it to the external liquidity. Okay, so right here, if I am to mark the order flows, I can clearly see that all the order flows in this case are mitigated. Yeah, starting with this one here. So this one here is an invalid order flow because it's mitigated, and this one here, the one that follows, also mitigated, so meaning invalid. The one that follows, of course, it's this one here, also mitigated, and this one here also mitigated. So in this case, I don't have any valid order flows, and in this case I am remaining with the order blocks as the valid POIs. Okay, right now let's mark the order blocks. Starting from the extreme, we can clearly see that this one here is the candle that is associated with the fair value gap. Of course, this here will make the extreme bearish order block. And of course, the decisional order block, of which it is now the other valid order block, it's this one here, as it is the one that caused that break of structure exactly right there. And we can clearly see that price has mitigated it exactly right there, and it's giving that bearish reaction. Okay, so just like I said, if this, okay guys, it's very important to mark the engineering liquidity. So exactly right there, we can clearly see that's the buy side liquidity right before the extreme order block. And of course, that will make us the engineering liquidity. Okay, but now we can clearly see price has mitigated the decisional exactly right there, and price has given that good reaction. So if I was to take a direct entry, of course I will take it from there, from here, after seeing this good bearish candle onto our favor. Of course, stop loss above, or beyond that reversal structure, and of course I'll be targeting the external liquidity right there. And you can clearly see by using the direct entry, the risk to reward, of course, 2 point something. So this is the risk to reward you'll be encountering when taking these direct entries based on the same time frame. 2 point something, 1:2. Sometimes it may even go like below 1:2. You can get 1 point something and all of that. It's rare for you to get 1:3, 1:4. Very, very rare while using the direct entry. And that's the reason as to why some of us have shifted to the lower time frame execution, where now we can get access to those insane risk rewards. 1:5, 1:7, 1:10, and all that. And this doesn't mean that I discourage the direct entries. No, if you're okay with the direct entries, please just go with them. Of course, you can clearly see right here, if I am to run price, of course, you can clearly see that price is heading onto our favor, and there's nothing wrong with the direct entry. You can clearly see exactly right there, price made it to the external liquidity. So that's the one way of actually taking these trades, the direct entries. This is the stress-free way, just waiting for reversal structure or a clear directional shift upon POI mitigation or a call liquidity sweep. By call liquidity sweep, of course, I mean the inducement or the engineering liquidity. And after that, of course, you just take your entry. Of course, your stop loss beyond some few pips beyond that reversal structure, and of course, you'll be targeting the external liquidity. So that's the first way. The second way is the one now I'm about to dive in, and that is the lower time frame execution. Alright, so in lower time frame execution, upon seeing price mitigating a valid reversal zone, decisional or extreme POI, or after price has interacted with a call liquidity level, it can be the engineering liquidity or the inducement. In that case, now you get to shift to the lower time frame. So in that case, it will depend with what time frame you are currently. Of course, if you're using the H4, like in this case, I will be shifting to the M15. If you're using the H1 or the 1 hour time frame, of course, you'll be shifting to the 5-minute time frame. And of course, if you're using the 15-minute, you'll be shifting to the 3-minute. And of course, for the scalpers, M5, shifting to the M1. And so since I'm using the H4 right now, let me shift to the M15. And of course, upon shifting to the M15, you will find that you are in an uptrend. As you can clearly see, price has taken out the inducement, more sell-side liquidity, reversed back, made a break past that swing point high. Of course, that's a bullish break of structure. But now price has mitigated a higher time frame valid reversal zone. So this means that this can be a possible end of this uptrend on the M15, and price may make a change of character and of course align with the higher time frame. But if there is something I would want you guys to take from this video, is that there is a small glitch in the structure cycle after price has mitigated a higher time frame valid reversal zone on the lower time frame. So this small glitch is none other than this. The change of character, it will not after price makes a break past this external low, because we can clearly see that that's the external low. That's not the change of character. The change of character will be upon the break of the inducement pullback. So we can clearly see exactly right here that this one here is the recently formed valid pullback. So this means that of course the low here, there is the inducement, And that's the reason as to why we call this the inducement liquidity. Okay, I know this one here is a minor inducement, and of course this external low in this case will be the major inducement, but in this case we focus with the recently formed valid pullback, and we can clearly see that in this case we can clearly see this is not a valid pullback. There is no any valid pullback up here, so this means that the recently formed valid pullback is none other than this one here. So this one here is the inducement pullback. In this case it's a minor pullback, it doesn't matter as long as that's the recently formed valid pullback. So a break past that will be now the change of character and not the break past this external low. But then after that, everything resets to normal. What I mean is this. Okay, so yeah, so you can clearly see this is after price mitigates a higher time frame POI or takes out a core liquidity level. So yeah, let me get rid of this in that case. Yeah, I mean that one. Yeah, so that we can have this clean chart. And of course, this one here will make now the change of character. In this case, our change of character will be none other than this one here. Okay, so that makes the change of character. And now after that, like I said, everything resets to normal. We can clearly see that this one here now becomes the inducement. Of course, the recently formed valid pullback, and we can clearly see price has already taken that. So that is, of course, the inducement. And right here, if I am to mark the POIs, we can clearly see this flip zone. Of course, demand to supply. So, but in this case, it's of course the extreme order block. So this one here is the extreme bearish order block. And I can clearly see that this one here is of course the engineering liquidity, exactly right there. So we have our engineering liquidity exactly right there. And so here is the decisional order block. Okay, so this one here does not meet the criteria to be called a decisional order block, but in that case we can clearly see that's the candle that, but in that case that would have been the decisional bearish order block, and we can clearly see price has made that reversal from there. So if I was to take this entry, of course I would doubt this reaction and I would place my stop loss above that high instead of above this reversal structure. And of course this is even the conservative way, so above that high. And of course upon price achieving to this external liquidity, this internal structure external liquidity, now you can move your stop loss to this high, of course right there. But we know the full TP is of course the higher time frame external liquidity, so it's none other than of course this low here. So this one here is of course the higher time frame external liquidity, and you can clearly see the risk to reward here is 12 if I place my stop loss above that high. And if in that case I place my stop loss, of course conservative, and this means above that high, you can clearly see I still have a 1:5 exactly right there, still a good risk to reward. Okay, so let me continue running price here so that we get to see what price is doing. Like I said, the small glitch is actually here. You actually need to identify the recently formed valid pullback, and once price breaks past that inducement pullback, or once price breaks past that recently formed valid pullback, then in that case that will be the change of character and not the break past the external low. So this is of course in a bearish scenario, and in a bullish scenario the same case applies. Okay, so right here, if I am to continue running price, you can clearly see that okay, luckily price is heading into a favor, and exactly right here price has made it to the external low, and of course now I'll be moving my stop loss to that high exactly right there. Alright, so like I said, after the small glitch everything resets to normal. What does this mean? This of course becomes a break of structure, of course to the downside, and of course our high is none other than this one here. So this one here is our higher high, and in this case of course I will need to mark the inducement. Okay, so right now here you can clearly see that price has already taken out the inducement here, because this one here was the major inducement and price has already taken that out. So in this case I don't have any valid POIs. Instead I have this this here. This is what we call the rejection block, because you can clearly see that this rejection block right here, price has mitigated this rejection block exactly right there. we can clearly see right here, this is the other one and price already mitigated it. So in this case, if they're mitigated, the one left unmitigated is this one here. And so that makes now the reversal, the rejection block, of course, that we'll be looking forward to take the reversal from. You will not be able to identify this inducement if you don't know how these candlesticks are printed. We can clearly see, okay, so if I zoom here, we can clearly see that price went up taking the high of this. So you can clearly see taking the high of this previous bullish candle. Then after that went down all the way and then reversed back towards where it closes. And then after that price takes out that major inducement and you can clearly see prices here. So this means that this one here is our external liquidity and we can clearly see, of course, the inducement is already taken out in that case. Okay, so the inducement is already taken out. So let's see what price does here. If I continue running price, you can clearly see exactly right there. Price has mitigated the rejection block and you can clearly see the major inducement sweep failed. Price went all the way towards the rejection block. Price has mitigated that rejection block. By the way, the concept behind the rejection block is actually a hidden POI on the lower time frame. If I shift here on the M5 or on the M3 or on the M1, you will find a hidden order block here, and that's actually the point of this rejection block. Okay, so now let me continue running price here. Actually, you can actually take the sell from here. And since this one here is a major inducement, of course, you can feel free to actually set your stop loss above that high. And of course, you'll be targeting this low. Since this is the M15, if you are, of course, like for me, I usually use the H4 as the higher time frame and the M15 as the lower time frame, but I usually target these external lows on the M15 because I don't want to hold my trades overnight to pay those swaps and all that. But for the swing trader, of course, they will have to hold all the way again towards this all the way towards this external liquidity, the higher time frame external liquidity. Again, you can clearly see the insane risk to reward 1:13. Guys, you can clearly see the risk to reward, how insane they are and all of that. And in this case, this would have been such a great trade. In fact, better than this one here, the one that we took earlier. Anyway, let me continue running price and you can clearly see price is actually reversing back. Of course, if you were hesitating to place that sell limit order, of course, your entry would have been after that bearish candle into your favor. Of course, your stop loss will be above there, and as you can clearly see, the risk to reward is still favorable. That is 1:9. Such a good risk to reward. Okay, so I will go with that one, of course, due to being conservative and all that. And as you can clearly see exactly right there, price has already made a break of structure, and you can clearly see again the process continues. Of course, the process of selling continues all the way until price makes it to the external liquidity. Okay, so right here we can clearly see that this one here is our minor inducement. So exactly right here, this is our minor inducement, and this one here is our major inducement. In this case, I can clearly see the rejection block is somewhere up here. So that's our rejection block. Okay, anyway, let's see where price reverses from. Okay, so let me make it slow. And exactly right there, you can clearly see this is a sweep. Price wigged, taken out the minor inducement, and we know that a minor inducement sweep is a valid entry module. So of course, after seeing that reaction, I wouldn't hesitate further. I will take that entry, stop loss above that high, or being conservative, of course, I would place it above this high. Why above this high? Because this one here is our major inducement, and price can actually come and take that major inducement. But anyway, you can place your stop loss right here, but just because we want to be conservative, I will just place it above that high so that I can give room also for when price comes and takes out this major inducement. After all, I will be targeting that higher time frame external liquidity, and that will give me, of course, a good risk to reward. Again, if I am to target that, you can clearly see this here it is. So if I am to target this, you can clearly see that is a 1:4.8, and of course I am being conservative, nearly a 1:5. That's a good risk to reward, guys. Okay, there's no need to be greedy. Yeah, so now let me run price and see what price does here. Okay, so exactly right there, you can clearly see price made it to the exactly right there. So this means that you can actually move your stop loss to this high here. Actually, this high is the major inducement. So this one here is of course our major inducement. So in this case, I will still leave my stop loss there. Okay, so let me continue running price. Of course, you can clearly see this one here is the, okay, it's actually this one. So it's actually this one here. Yeah, this one here is the order block, but in that case, the order block does not involve an inducement takeout. So in that case, it will be an SMT or a weak one. So I wouldn't take this trade even if price reacts from there. Okay, so let me continue running price, and you can clearly see price mitigated that, reacted from there. Okay, price is still doing all of that, but you can clearly see eventually, yeah, price made it to that end. So in this case now, I can now move the stop loss to this high, exactly right there, because now price has made a break of, because now price has made a valid pullback below there. So this one here is it, and the price has already mitigated it, so it's a mitigated zone. And where is our inducement? Of course, our inducement is none other than this one here. So this one here is our inducement. Yeah, we can clearly see that that's a valid pullback, guys. You can clearly see that that's a valid pullback, and so that's our major inducement in that case. Yep, so now let me get back here. We have our trading range exactly right there. So let me continue running price, and we can clearly see, okay, so price has mitigated the SMT exactly right there, and price has, okay, but in this case, is this retracement deep enough? Let's see. So if I do this, we can clearly see that this retracement is not deep enough, and of course this one here now will be the major inducement in that case. So this one here will be the major inducement, and this one here will not be a valid break of structure. Okay, so now let me continue running price. All right, so price created another. Okay, so this is not a valid pullback because those were insider bars. So now let me continue running price. Okay, so price has mitigated that SMT exactly right here. We can clearly see the SMT, and price has taken out the major inducement exactly right there. So if I see a reaction from there, of course, I will be taking that entry. Okay, so you can clearly see that nice reaction there. So that good evening star pattern. Of course, you can set your stop loss there, but like I said, the better one will be above this high. And of course, we'll be targeting none other than the higher time frame external liquidity, of which is this one here. So exactly right there, that will be your target, of course. And the external liquidity is none other than this one here. So this one here will be the external liquidity. Okay, so let's see the fate of this trade. Okay, so running price here, we can clearly see that, okay, price was heading into our favor until, okay, let me make it fast. Yeah, you can clearly see price stopped us out exactly right there. If we had placed the stop loss above that high, you can clearly see we would have been stopped out. Actually, the reason as to why I placed this high is because this retracement is deep enough. If I do something like this, we can clearly see that this retracement was deep enough to the 50%. And the reason as to why I didn't mark this one here as the break of structure, it's because this one here, it is because this retracement didn't take out any, like it didn't take out any inducement, and that's the reason as to why I didn't mark that as a break of structure. In that case, I will just use that as a weak break of structure. Okay, anyway, you can clearly see price mitigated that order block that was, of course, this order flow that was available here. Even though this one here was not a valid break of structure, like I said, this retracement was deep enough, but in that case, I would still not be interested for this break of structure, nevertheless. So price mitigated that order flow, and you can clearly see that, and you can clearly see price is heading into our favor, and ultimately, we can clearly see that price made it to the external liquidity. Okay, so this was a 3.3, of course, and in that case, we will be targeting this low. And if I was to do this, you can clearly see it would have been a 1:7, but in that case would have been stopped out. So yeah, it was worth it. The 1:3 was worth it. So exactly right here, this is what we call the major inducement being taken out. This one here is our break of structure, of course. And if I am to mark the inducements, of course, I can clearly see this major inducement here. And I can clearly see, okay, so there is no any decisional here, but there is the extreme exactly right there. So this one here is the extreme bearish order block. And of course, this one here is what we call the engineering liquidity. Yeah, the decisional is not clear here. So it will be probably hidden or something like that. Okay, so this one here is what we call the inducement. And this one here is, of course, the engineering liquidity. So let me continue running price here. So exactly right there, we can clearly see price is heading lower. Okay, price created another inducement below here. And I can clearly see price has already taken it out exactly right there. So let me continue running price. Okay, so price. And exactly right there, you can clearly see that price made a break past this low. But this, of course, is not a valid break of structure. And the same reason is because this retracement is not deep enough. So in that case, I will move my major inducement to that area. And that, of course, will be the major inducement in that case. Okay, so that's our major inducement. And major inducement. Okay, so let me continue running price. And we can clearly see price is heading higher. Price has taken out the major inducement. Okay. And we can clearly see that reversal. So there would have been my entry. Stop loss, of course, if you place it there, that will be aggressive. So the conservative, of course, it will be there. That would have been the conservative because price can actually fail that major inducement. Yeah. So, but anyway, the reason is to why I'm okay with placing the stop loss above that high. It's because if I target this low, you can clearly see that my target profit, you can clearly see that this will give me, of course, a 1:2. And the 1:2 is, of course, a good risk to reward. But anyway, if you're okay with the risk, you can go aggressive. And of course, stop loss above that high, and that will give you a 1:8. And of course, a major inducement sweep is a valid entry module. So yeah, and of course, a break past that, that external low will be a break of structure, a bearish break of structure. Okay, and luckily you can clearly see price respected that sweep, and you can clearly see price headed lower and lower and lower, and eventually price made it to the full TP. Exactly right there with the 1:8 RR. And guys, those are actually what I was talking about. Those entries. Yeah, so if I am to do this, you can clearly see that was our entry. Of course, stop loss above that high, targeting, of course, that external low, of which is this one here. And yeah, you can clearly see that was a good risk to reward. Again, where was this other one? You can clearly see it was this one here after price has taken out that minor inducement. Stop loss, of course, we set it there because this one here was because this one here was a major inducement. So yeah, but of course you can actually place it above that high or even better above this high, so it doesn't matter. And of course targeting that higher time frame external low. So exactly right there. So you can clearly see in one move you would have taken all these trades instead of just taking one single trade based on the same time frame. Imagine how many trades you would have taken if you would have shifted to the lower time frame. So you can clearly see again this here was another trade, of course targeting that low. And as you can clearly see, these were all the trades you would have taken here. So how many trades were these? So you can clearly see these were 1, 2, 3, 4. 4 trades, of course. Of course, you would have doubted this trade because of this decision order block, but at least you would have gotten at least 2 of these here. Yeah, and you can clearly see all of them gave this insane risk to reward. And in this case, some of them here we have been conservative. Yeah, so you can clearly see that lower time frame execution, if you can actually master lower time frame execution, you can have access to such insane risk to rewards. And the same is true, of course, in a bullish scenario. And by the way, if you have noticed, the only major thing was just here upon price mitigating the higher time frame order block. Yeah, the recently formed valid pullback, that was the only small glitch that you actually need to know. And after that, everything is just normal. And of course, the setting of the stop losses, depending with if you are conservative or aggressive, that's now upon you. But that's how you'll be doing the lower time frame execution. Of course, by now you know that the lower time frame execution outweighs the direct entry, and that's the reason as to why we all shift to the lower time frame execution, because of these insane risk rewards and all of that. But of course, the direct entry is also good and simple. So depending on your personality, you will know what to choose. Anyway, let me not make the video long. I want to believe that you guys have learned a lot from this video. So do me a favor, drop a like, and I will see you on the next one. Peace.